Paulinia, could you confirm if you have sound? For brokers, for Forex, the one I'm using, it's this one. I can post my bot for binary and Forex. Let's see. But could you all confirm it if you have sound so I can get started? Would be I'm repeating myself here now, but it's good to know. Okay, I got now confirmed that the sound is good. So then I will basically just get started. So what I was telling before we actually had sound is that this session is more for to get started, because many just jump into trading Forex without any type of plan or nothing. They just find an indicator, they start trading, and they start to lose money. So you can have the best strategy, you can follow the best signals, whatever you feel for, but still you lose money and you wonder why. The reason for that is you need to make a trading plan. Without a trading plan, you will not succeed with Forex. So then you wonder, what is a trading plan? Trading plan can be different from people to people. You will figure this out. The trading plan you make in the start will not be the trading plan you have in the end, but it's a start. So in a trading plan, for example, some people, they have problems with emotions. Even I have problems with emotions with trading. And a trading plan is going to help you with that part. So for example, in a trading plan, you, for example, decide, okay, I'm only going to close trade at the correct take profit and stop loss levels. Like for example, let's say you take a trade here now. You take a short position here now, for example. Like now, for example, this would be a very bad short position, by the way, because you can see we have already broken this. Let me mark this, but I can get to that after. Let's take this trade here now. Then in a trading plan, for example, you make that you always will have a trade with 1 stop loss and 1.5 take profit, for example. So then we take this one down to, let's say you have your stop loss there, for example. Then in your trading plan, for example, you never close this trade. You let it run till either hit stop loss or take profit. Because many they have this problem, especially if you are what's called a swing trader. Swing trader is some of the best ways of trading if you, for example, have a work from before and this is just a hobby for you. I will basically after also get into what's the difference between swing trade and day trader. I'm just explaining now so you get a small idea about the trading plan. Okay, so the problem you can have with a swing trading is that it can take up to days, even weeks before you hit either stop loss or take profit. And then it's many traders, the big problem they have, that's why you need to write it in your trading plan. The biggest problem they have is that they close the trade right away, come in profit. That means, for example, let's say now that you entered a trade down, let's say around here, okay? And you have been very long time, let's say you have a little bigger, so you don't hit the profit, you're there, right? And they see they come here in the profit side and they close it. I'm in profit, I close it, because maybe you lost the 2 first trades and right away you see profit, you close it. Because then the problem you will have is, yes, you might get a few winners, but one loss then can erase maybe 3 or 4 take profits. That's why you need always to have the rule that you never close the trade before, let it either go to your stop loss or to your take profit. Because then in the long run, you will make money with Forex. If you start to close the trades too fast, then you start losing. Because what I have learned in the time I have been trading is that it's easier to hold a trade in minus than hold a trade in in the profit level. So for example, you are in the profit area, it's so much easier to close it when you're in profit than when you're in minus. Most people hold trades in minus and close it right away they see profit. Like let's say you are a day trader and you have the trade open for a few days and you're in minus, you're very worried, right? And right away you see the trade go in profit, you close it. You're super happy, oh, I got out of this trade, I'm so happy. And then after 2 days later you see, oh shit, if I hold it, would even I hit it, my take profit. But okay, you think like this, okay, I'm super happy, everything go okay, but that's not the case here. Things are not okay then, because then you lost one possibility for a profit trade. You understand? So that means that you would have done so much better just to hold it. It's better to get a few losses. You need to trust that you have a strategy that is better in the way that you have get more winners than losers. No, don't need that. Because when you have 1 to 1.5, you can even have a 50% win rate and you still make money. But if you start to close your trades too early, then you're losing money, even if the strategy is good. So that's something you should write then in your trading plan. Write it on a piece of paper, whatever, put it in front of your screen. I will not do that and that and that. Or for example, another thing more technically, that I only take a trade when all the indicators say yes, and for example, are close to, for example, a support or resistance. Like for example, if we take now euro against dollar here now, right? Let's just add one indicator. Let's put, for example, MACD. That's a very typical indicator many use. So let's just add MACD. Let's see. Just find a MACD crossover. There we have one. Okay. So a typical here, for example, you're sitting waiting for the blue line to cross down for this red line you see there, right? And then you can have, for example, in your trading strategy, let's take this line, this here now, just so you all know which one we are talking about. Let's change this one for yellow. So you're talking now about this yellow line you see up here, right? So let's remove this thing here. Let's remove that. So now you're sitting waiting for this blue line you see here to cross down for the red, right? Then you can have in your trading plan that you only will take this trade if you have broken this yellow and the next bar close below. You can turn it down to, for example, 30 minutes. Okay, so you only take it if in the next bar close below the yellow line. So that can be, for example, a rule you put for yourself in your trading plan, that you only take the trade when you close below the yellow, when the blue line have crossed the red line downwards, like you see here, for example. Here you see the blue did cross the red down, and you have then broken, you can say, this support, because now this yellow line here now is a support line now, and support lines you can never trade against it. You need to break it, and when you've broken it, then it's a good trade. Okay, so that's something, like I said, is something you need to put in your trading plan. So I think you all now understand that a trading plan is something necessary for you to be a good trader. Let's see if you have any questions. No worries. You have not lost anything. The first, the first 20 minutes of the session, Jonas, basically, I did not have sound. So the session, I think, now have been like 10 minutes only. So you have not lost anything. Basically, I'm just talking about the trading plan. This session is very basic, but it's necessary for us to get to the next level about trading. So, because if you just jump directly into the ways of trading and things I will do in my next sessions, you need this basic talk. Because what I have learned that without a trading plan, we do so many mistakes. But if you have a piece of paper in front of you, in front of your screen, telling you that you need to have this, and this for trading, you will then feel so more comfortable about trading. So because you know, okay, I lost 2 trades today, for example, no worries, I follow my plan, and you know in the long run you will make money with it. Okay. By the way, is any of you trading from before? Have you started already with Forex? Just right here, and I will check after, and I will just continue my session now. But if you have any, also if you have any questions, just write it down here also, and I will look at it after. So, another thing, you need to decide also which type of trader you are. And there are some pros and cons for both ways. For example, like I said in the start, you have something called swing trader and you have something called day trader. And it's a very big difference between these two. So now let's say, let's take swing trader first. Let's say now that you have a 9 to 7 job, for example. So it's difficult for you to follow the charts all the time. Then a day trader can be for you. A day trader, he don't look at 30 minutes. He don't look at 15 minutes. He basically look at the 1 day chart. Okay, let's remove all these things here. Let's remove this MACD also. So a day trader, no, swing trader, he look at a one day chart. So then he start like this, for example, he make a trend line here, for example, like this, for example, right? Then what he will do, he first make all these marks, everything, like you make a horizontal line here, for example. Here you can see we have a strong, so here you very easily now, for example, with only these two lines without any indicator at all, you can very easily see that something will happen very soon, either to the downside or to the upside. But so then what you will do, you will go down then to 4 hours, and you wait and wait and wait till you, for example, cross this blue line up here. You wait till you get a retest and take the trade. And you maybe are then into the trade for like, can be a few days, can even be weeks before you close the trade. Because basically, you can see here now, each candle you see here now is 1 day. So you can see it from the trend started, actually the trend started even more up here. Started actually up here. So you can see this started in February, 4th of February. You, for example, you could have entered a trade on, in that time you had, for example, a line there, right? And you could already see that you're in down trade and you broke this. Let's make this another color. Let's make this one red. You broke this support here and you had a confirmation. Yes, we are going down, and you're holding. As long as you don't see you're breaking this blue line here, you can see you've held this trade since February and you still have not closed it, because you only close this trade when you see on the daily chart you have opened a new one above this blue line. So that's basically, when you're a swing trader, you can relax, you can go to work, you can do whatever you want. It's not stressful trading. But the problem with this trading is that you have another type of emotions with this. You have the emotion of holding a trade that maybe go the wrong way, because this is a luxury scenario, that you're holding a trade that go in the correct decision, correct way, okay? So when you have holding, let's say you did go wrong for you and you start to go there another way, and you think you start to hold it and you start to go against your trading plan, right? So let's say now, for example, you did take this, does not make sense, but I will just make it so you understand. You have a long trade here instead. You thought that would go up instead, right? And you have your take profit, let's say up around here, and your stop loss was here, for example. And let's move this a little to the side. And you see here, the trades start to go against you. And you start to see that get very close to your stop loss. What is easy when you hold the trade for many days? I move the stop loss. You start to move the stop loss there. Okay, you start to see, okay, cool. Start to go in the correct direction. And you hold it, and then suddenly start to go close to your stop loss again. And what you do? You move your stop loss. You move and move and move and move and move and move. Maybe then you are now in June and you're still holding the trade and you are in crazy minus. That's why I told in the start about trading plan. Put a piece of paper telling you can't do that. Take the loss and be done with it. But that's the thing with swing trading, is there is the emotion that come in, that is easier to do an error like this, because you have been holding the trades for so long time. You're exhausted, you see that you're in minus, you're hoping things will change. Even maybe you go in one more time here, you start with martingale, and you go more and more in minus. And you start to see that your account even are close to lose everything. But if you just had followed your trading plan, taken your stop loss that was around here, you would have been so much better off, done with the trade, look for another trade for another pair, and you maybe have earned it back already. Trading plan. Another thing in the trading plan, for example, take only 3 trades a day. Seriously, I know that it's very easy to take a lot of trades. Don't do that. Take your time. Wait for the correct time to enter a trade. Like for example now, you can see in euro against dollar, for example now. You can clearly see here now, we are very close now to have a good trade here for a long trade. So for example, let's say now that we break out of the blue line here now and we get a retest, because I like to take a wait for a retest, because many times can start to go up like this and he go down retest and then he shoot up. So always wait for the retest. Then for example, you can see the perfect trade you would get if you entered, for example, here now. I'm not telling you to take a trade now, by the way. Don't do that, because we still are waiting for this one. This one you can see will be a winner very soon, but we need to break this line first, okay? But this way of trading is something I will get to later. This is just to prove the point with swing trading and day trading. Is to prove the point of have a trading plan so you don't do these mistakes. So, and other things you have with swing trading, to take the cons, you will of course hold most of the time you will hold trade overnights. And when you hold trade overnights, you need to pay a fee for your broker, because you pay a daily fee for the trades you have. Typically, if you have a good broker, like the broker you can see I'm using, you don't pay that much, but still you're paying every single day to hold a trade open. And also you have the risk of in swing trading. You have the, for example, political, you can see what's happening in Russia and all these type of things, right? Ukraine. And you can have, for example, natural disasters, things can happen that make a trade go even more against you much faster. That's things that you don't need to worry about if you are a day trader, okay? And also you will need much more capital when you are a swing trader, because when you're a swing trader, when you're trading for from day to day, you have a much bigger take profit and stop loss level, okay? So then the pips you will calculate will be much more than a day trader would do. So swing trader, you need a bigger account to be a swing trader, okay? Now let's see. So let's go back here. So now let's talk about the day trading part. That's completely different. When you're a day trader, you actually do not even look on the daily. You can actually do it. You, for example, let's say you enter the trade around here. You are in 31 of Mars. You can see then you make the lines, everything, or you can, for example, add one indicator that is easy to use. Moving average, let's say. Moving average, let's add that one. I like to put this one because this one will show both. So let's put some colors here first. Let's not show this one. Let's only concentrate about this one for now. Let's make it a little. Okay, so moving average, that's something that gives you a good indication if you're going for only shorts or only long. So for example, when you see we are below the yellow line, that means we basically should only be looking for short. So that's something that you can look at on a daily first if you're a day trader. That, okay, I'm only looking for short trades. Then you go down, okay, you can see in 4 hours you're now close to closing above, but you can see with the trend line you have the blue one that we are still have not managed to cross that one, so we are still looking for short, okay? Then you go down to 1 hour, That's where we're going to take our decisions. You can see now that you are close to this blue line you see here. So then you can think like, okay, probably will not break this one now. So this could be a sniper entry, for example, right now. So here, for example, we could have taken a short here, one here. Let's move a little to the side here. We take a comfortable stop loss, so you don't get these spikes that will hit it. We take a 1 point, let's say you have in your trading plan that you will take 1.5 in, and just drag it out there, and that could be, for example, an entry. Because in day trading, we are looking on the 1 hour, you can even go down to 50 minutes and wait and see. Okay, here you can see on 50 minutes that you already got a rejection and we start to go down. So here, and you can see also here that you got a retest. So here on the 50 minutes we can see is a perfect trade. And then you can see where to take then to take profit. So we can then start to look here now. You can see down in this region here, we have touched a few times. So maybe our take profit now when you go down to the 50 minutes, you can see, okay, it was a little too big. So let's take it there, for example. That means also we need to go back to the 1 hour, change our stop loss a little, because now you can see it's too much, but let's see if you're still comfortable. And I'll say we are still comfortable there. We will not hit this area up here. If we do, it's okay. So then we can have then decided down to the 15 minutes to the take profit, because you can see this is an area we have touched many times. So the probability that we will get the reaction here now and go at least down here before we shoot up, that's big. Because if we then go back to the one day, you can see, if you zoom in, zoom in, zoom in, zoom in, you can see here now that might go days, can be even next month before we start, because often he can go all the way down, so he's squeezing down here before he starts to go up. So it can be a long time yet before we break this one. So the probability here would be that we would take the take profit here. So then everything was okay on the trading plan. That would be a trade. So you can see now, already since I did open this, you can see already now we will be running in profit. And then we have in the trading plan, don't touch it, don't move stop loss, don't do nothing, just let it run. Because then we are doing everything correct for our trading. Now let's see if you have any questions. So, like I said, this for me, this would be a trade for me today. I would have taken a short here now on euro against dollar. If it's a winner, no guarantee. You will get losers. But the thing is, as long as you have a trading plan, you will always be good. Because in the long run, you will make money. Just make sure whatever type of strategy you start to use, you backtest it. So you know that you know by yourself that this I have in my trading plan is something that works. It's not something that you're guessing. You have backtested like for many months. You know that it's at least more than 50% win rate. You know that you have your take profit is bigger than the stop loss, and you can feel comfortable that this is working for you. So if you even get 2, 3, even 4 losses in a row, you know that you will do good in the long run. Okay? Are there any questions, by the way? No? Okay. If you have questions, just write it down here and I will get to them. So Let's look a little on other pairs, by the way. I can actually start to get a little more into some type of strategies also, as I think I have been talking enough of trading plan, even though I will say the most important with Forex trading is that you need a trading plan. The reason I even repeat this word so many times is that you, right away when you start trading, you start to think, do I follow trading plan? When you start to do that, you will be successful. So then you have many type of indicators that you can start to use. And here is the thing, and I can't stress this enough, I will say again, in your trading plan, write down, and this is important, write down the indicator you're using. Because here is a thing that also many are doing, and there we come back to one of the things I talked in the start, emotions, okay? You have then, let's say you have back tested, let's say MACD for example. MACD is one of the most used indicators, and it's very easy to use, okay? You have back tested MACD, right? And you have seen, okay, with a 200 moving average on 30 minutes, okay? For example, here, you see you are below the yellow line here. This is a 200 moving average, okay? And you see the cross was above this 0 point, because that's also something you need to think about. And you did see, let's say you taken this trade here, for example, let's say, let's take it. We have taken the trade here. The cross occurred on this one, okay? And you put your stop loss, let's say if you take a stop loss on the 200 moving average, and you want a 1.5, so we would have taken the trade like this. So this will be an ongoing trade right now in minus, okay? So see if there's any no questions. Okay. So the key here now is that wait a little technical issues here now. There, yeah. So this, for example, would be a trade, okay? So in your trading plan then, you are sitting holding this, and you hold it for like there you have 1 hour, 2 hour, 3 hour, 2.5 hour, and you come to the take profit here and you close it. Right, not the right away you come in the green area, close it. So you write down, we are only letting it run to stop loss or take profit. But here, back to what I was telling also. The problem is that the reason you need to write down MACD in your trading plan is that, let's say you have backtested this strategy for like, let's say 100 trades, because any strategy you want to backtest, you need to do 100. And when you backtest also, you need to even write down how you would have traded, so you don't put in your favor. I will go back to that also after. So the reason you need to write in your trading plan MACD, for example, is that it's so easy that, let's say you take this trade now and this hit the stop loss, and then you take one more trade, hit the stop loss, you take one more trade, hit the stop loss, and then you think, but this strategy don't work, and you start to jump to another strategy, you lose, you put another strategy, you lose. No. In your trading plan, you have written down MACD. You have backtested this one. You know it's good. Keep to it. It's okay to get a few losses. 2 wins will recover 3 losses. Okay? So, that's why it's super important that in your trading plan, you start to write down everything. Everything like strategy, everything I talked about in the start. Just take profit levels, about if you should, for example, when you're trading with MACD here, for example, you always, for example, put, you don't take trades if your trade occurred far away from the 200 moving average. Like here, for example, is pretty good because it's not too far. Because many, they like to put the stop loss level little above the 200 moving average. Because typically you can get a more like a rejection on the 200 moving average. And then, but then you can see if you're too far down there, you can see now we need to move the take profit even farther down. Okay, so you can have more like in your trading plan that you only take trades if they are very close to 200 moving average. Because another thing that you need to do is that you need to think about these type of things. Okay, because more rules you put for yourself, okay, there will be less trades, but your win rate will also be much higher. Okay, so for example, go back to the way of back testing something, right? So now you can see, now we are obviously only looking for short trades. So for example, if you take here we have a cross, for example. Let's see, we are there, we are crossed down. Okay, so the trade would be taken here, and we can see already we are comfortable in with, if we take, let's zoom out a little, we don't need so much, we take a little above the 200 moving average. Okay, and we take 1.5, there, and you can see it's 149, but if you take a little more down, even if it's 150, it's a little difficult to, even 156 you can see. So this one, for example, would have been a winner. Okay, then we go back, do we have any more? Like this one you see here now, we would not have taken because you see the cross did occur below the 0. So that's something you would put in your trading plan. I only take when crossed down above 0, and only if crossed below to go along. Okay, so here basically we would, in our trading plan we would have 2 trades, one here and one occurring here that we would take around here. Okay, so then we know, okay, from our back test we have 1 winner and 0 losses. We go back, so now you can see, now we are above the 200 moving average. So now we are only looking for trades that occurred when it's a crossing below the 0 line and crossing up. So the blue line cross up for the red. So for example, here could be a trade, and this would be a loser, but it's good to see. So what we do, we take here, we take this one here, we will take in there. But here, what happened now? Do you see? We are very far away from the moving average. So we would then scratch this trade. And you can see, it would be good that we did not do that, because you can think when you need to move the stop loss so far down, then you can guess how much the take profit need to be up at the same time. So we would never have taken this trade. So then we saved that money, right? Only because we had in our trading plan, we only taking trades that are close to the moving average. So now let's go here instead. Here you can see we are below the 0 line. We cross up. Okay, the trade will be taken here. We go then here. We put a long on this one here. We take a stop loss right let's see, a little below the 200 moving average. We put it to 1.5. See, let's say there, and there you can see. Now we have 2 winners and still no losses. Only because of our trading plan, we can see that we have done correctly. Now let's go more here. Here, let me see. We can see we cross up here now, but we are crossing to go down. But you see, we will not take in that trade because we are now already above the 200 moving average. You can see we cross, but we will not take it because we are above the 200 moving average. And often when we close with a bar above the 200 moving average is also a sign of a new trend. And even though you can see the stochastic say, MACD says that you should go down, we will not take in that trade. So just again, because we have in a trading plan the rules, we will not take in that trade. So let's go more down here. Now we can see the cross here, and here you can see this trade we would have taken. You can see we cross down, the blue line cross the red line down, we are above the 0 line, and the cross occurred while we are below the 200 moving average. So let's see how this trade would have turned out. We would have taken this trade on this spot right here. We would have set our stop loss little above the one you see here. You see we have one here. We would set a little higher than this one. I will even move a little more. It's a little difficult to, not so much. Let's see if we can change this. There, let's see. We have put this one to, and let's see how that looks like. I think we would set it on 783. Okay, then we go here, we move our stop loss to 783. So that's an area where I put the stop loss a little above the last one here. Then we can already see it would be a winner, but let's put it correctly. You can see here now, we would enter trade here, would be go a little against us for a little while. You can see we even very close to our stop loss. We don't touch it, we let it go, because in our trading plan says we don't stop any trades, we let it run. So then you can see we have 1 hour, 2 hour, 2.5 hour, and we hit our take profit. 2.5 hour. So there you have day trading again. The trades will never be holded so long. Okay? So now we know we have 3 examples, 3 winners with the strategy. So let's go more back. You can see here now, this one it's crossing below, so it's within our trading plan. You see cross below the 0 line is crossing up. We are above the moving average. That means we are only looking for long trades. So we will take the trade here on the next bar. That will be this one here. We will set the stop loss a little below the last one here. Let me see. So we will take it on 967. We go here. 967. So we would have that little below the last bar you see down here. We put this one to 1.5. Let's see. And there. One more, you can see, will be a winner. So this trade, you can see, would take us, even here you can see, we get more like a retest of the support of the 200 moving average. So we have 1, 2, 3, 4, 5, 6, 7, 8, 7.5 hours. So this trade you can see was a little longer, but we are still within the same day. So this also would be a trade that would not occur in a overnight fee cost. So we not get an overnight fee cost with this one either. So then let's see if we can find another trade. Here we can see we have a cross below the zero, and you can see also we are above the 200 moving average. So one more trade. We would take our stop loss a little below this, and let's take 1.5, and there you can see we have 4 winners in a row. So that's basically how you backtest. So let's say now we have done 100, and you can already see, yes, with all the rules with it set now, we can see MACD together with 200 moving average and be close to 200 moving average with the trades, that we never take trades that are far away from the 200 moving average. Like let's take one more example where, like here for example, this one we will not have taken because you can see we are too far away from 200 moving average. This one might have been a profit trade, we can just check it, but does not matter, we will not have taken it. So let's take the trade would be here, I think on this one, and let's move it up to this one below, see? Because what happened then? Do you see? We will hold it, and we'll go days and nothing will happen. Even this one would not go because this is 1.2, do you see? So the thing is, that's why we are following the rules, be close to that you have written in our trading plan from the start. And I'm not telling you that you need to trade with MACD now. MACD is one of the most favorite indicators that are used by traders, but many use it wrong. So for example, here for example also you can see we are crossing. This one might have been a profit trade, but with our rules we will not have taken this trade here because we need to be close to the 200 moving average. Like here for example, we are close, so this one will take. So following all the rules we have, like I said, all the way in the start of this session, a trading plan, it's what will make you successful. Don't take trades just to take it. You see crossing here, you've been waiting, you want to take a trade. Cool. But if you start to trade like that, you will find out very fast that even a winning strategy can make you lose. So you see, with the rules we did put, we have only winners, you know. This one, we can arguably say that is close enough. So here, for example, we could have taken a trade, right? Because we see, again, we cross here, we are crossing, we have the stop loss here, and we put it up. And what happened? We get it within the same day. You see, we open the trade in morning, 6:30 in the morning, and we close it around 6:30, 6:15, something like that. So I can't stress enough how important. Actually, we did not close it there. We closed it there. So we closed the trade. Let me see. We close it. We are still within the same day. So as long as you follow your rules, you will be so much more successful. Like I said, I can't stress enough how important it is to have a trading plan. And like I said in the start of this video, I wanted to repeat this word so you'll be so tired all about me talking about a trading plan. But trust me, when you start trading, if you have seen my video now, you then this word would come in your head, and trust me, that's a good thing, because then you write down your rules, and then you start trading. Do I follow all my rules? And if you see you follow all your rules, and like I also said, and you get 1 loser, 2 loser, 3 loser, you can still sit relaxed and know that yes, everything is okay. I follow my plan, I have back tested, and I know this is working long term. You know it. You don't need to stress with it. You know it's working long term. Okay? So, another thing that I have not taken till now, but is something you also need to have in your trading plan. That is, how much are you going to risk each trade? Many, some say that they risk 5% each trade. Some can be 0.5% each trade. Everything is about where your comfortable level is. So let's say you have a trading strategy that you have backtested for 100 times, and you can see that the win rate is maybe around, let's say 60%. Then you can comfortably go in with like 2-3%, but you write that down in your trading plan, okay? That you always risk the same amount. Because if you start to change it also, that let's say you have 2 losers in a row, and then you think, oh, I lost this and this, and you want to recoup it in the next trade, and then you start to risk more and more and more, you can end up break your account doing that. So always have the same risk reward. So you always are risking the same, okay? So you put a lot size that will be equal then to 1-3%, whatever you have chosen, but always stick to the same number. Don't change it. Let's see if you have any questions. I teach, let me now see. Let me see now if I have any questions here now. Yeah. I teach basically Monday to Friday. Right now for this week, I'll be teaching in Wednesday and Friday. Okay? So next week we'll see how many will be. But for this week, yes, there will be Wednesday and for Friday. Okay? So in the next video I will make, I think will be only trading strategies. I will show many ways of trading that is proven that you can trade with profit. I will show the easy way of trading in the start. So for the Wednesday video and Friday video, I will show everything you need to know about trading, for example, MACD, RSI, Doji Band, Bollinger Band, Doji Channel, and I will then, you have also something called Devil Bands. I will show all these type of ways of trading for this different type of trading styles, and how, because there are so many I have seen in YouTube and everything that shows turn that down a little. Yeah, so there are many ways you can trade. I've seen many YouTubers and things that are teaching ways of trading, but many are showing ways of trading with indicators that actually can be good, but they show a wrong way of using the type of indicators. Like in this video, I did show a little from MACD, and using the MACD indicator correctly you can do successfully trading only with MACD together with moving average. But everyone is different, right? So that's why I will, in the next two videos, in Wednesday and Friday, I will show them how you can use this indicator correctly, okay? So that's basically the plans I have for this week. Later on, of course, I will show the way I am trading personally. I use more trend lines, support, resistance, things like that, and follow the trend on the trades. But I think that will be something for a little later. In the start, I will show the easy way of trading, so you can just get started today, basically. To start with trading with, for example, MACD, RSI, stochastic. Stochastic, for example, by itself is not good enough, but use it together with Bollinger Band is another game. But all this I will show in the next two videos. So yes, Wednesday and Friday is the two sessions I'm going to have here. I know the other teachers, you should of course follow them also. But if you want to follow mine, like I said, in the same time, 18:00, you can see in this in the dashboard. So in Wednesday and Friday, I will hold these two sessions. So for the ones that want to follow that, follow me then in Wednesday and Friday. For next week, I will check out a little more which times we will go for. So for now, this is everything for this session. I hope you all did enjoy it. Yeah. So also, if you have any questions, and if you come up with any questions from this session later on, write them down and ask me Wednesday or Friday. I will remember them. And you can ask me anything that is from past sessions I had. So you can use this chat area also to, yes, I can, if you have any issues with something when you're, for example, sometimes when I'm teaching, it's often I take things for granted, right? That you understand it, but it can be simple things that I even don't think about. So there are no question that is stupid in Forex, okay? So any question you have that you see now, oh, I forgot to ask about that, no worries, ask in the next video. So then I see you all in Wednesday and Friday. I hope there will be many to meet up. That will be two very good sessions, because then we are going into the cool thing about trading. And later on also, I will start to do more and more, give some signals also in my sessions. So if you want to copy what I'm doing, you can do that if you feel for it. So with that, I hope you all enjoy. Have a perfect day.